All right, let's unpack a business move that on the surface looks completely insane. We're talking about MP Materials, a company that just fired its #1 customer. And in doing so, they placed a massive, high-stakes bet on the future of American technology and, believe it or not, national security.
So it all comes down to this one kind of baffling question. Why on earth would a company willingly cut off its main source of cash? That is exactly what MP Materials just did. And the answer? Well, it pulls back the curtain on a fascinating story of strategy, risk, and geopolitics. Okay, so let's get right into what happened. In the third quarter of 2025, MP Materials did something that, to just about any outsider, looked like pure business self-destruction. I mean, just look at these numbers. It's staggering. In the third quarter of 2024, the company sold over $43 million worth of its main product, rare earth concentrate, and pretty much all of it went to China. Now, fast forward just 1 year to Q3 2025, and that number is zero. A big, fat zero. They completely turned off the spigot. So why is this such a big deal? Well, it's because MP Materials is in the business of rare earth elements. And look, these aren't just any old metals. They're basically the secret sauce for the super strong, lightweight magnets that power everything from electric vehicles and wind turbines to our most advanced military hardware. The key stuff here is called neodymium praseodymium, or NdPr for short. It's what makes all this modern tech possible. Now, as you can probably guess, a move this dramatic had some immediate and, well, painful consequences. The company's latest earnings report spelled it all out in bright red ink.
The bottom line, a net loss of $41.8 million for the quarter. That's a 64% jump in losses compared to the same time last year. This one number really shows you just how much they were relying on those sales to China. And of course, this hit their total revenue too. It fell 15% year over year, a drop that was caused almost entirely by cutting off those concentrate sales. For investors, this all translates to a price-to-earnings ratio that's deep in negative territory. And just as a quick reminder, a negative PE is basically a blinking sign that says this company is not profitable. It's usually a pretty big red flag. But here's the thing. If you only look at the red ink, you're missing the entire point of this massive gamble. What's happening just beneath the surface is a much, much bigger strategic play. Because while those concentrate sales dropped to zero, something else was quietly ramping up. Their production of the really valuable separated NdPr, the stuff you actually need to make magnets, hit a record 721 metric tons. That's a 51% increase. So you see the strategy here? They stopped selling the raw dirt so they could start refining the gold themselves. And this brings us to the real reason behind this incredibly risky move. MP Materials is trying to build what you might call America's magnetic moat, a very unique competitive advantage and one that's being built with some really powerful help. You know, in the world of business, an economic moat is some kind of durable advantage that protects a company from its rivals, kind of like a real moat protects a castle. It could be a powerful brand, a key patent, something like that. But MP's moat, it isn't built on things like patents or a catchy logo. As the Motley Fool so perfectly put it, it's a policy shield. It's an advantage that's not being created by the free market, but by direct strategic action from the US government. And you can see exactly how this policy shield was built, piece by piece. This has been a long-term, bipartisan effort. It kicked off with an executive order under President Trump, then a $35 million Department of Defense investment under President Biden. That support kept growing until the DoD actually became the largest shareholder and, this is the crucial part, guaranteed a price floor for MP's product. That government backstop is the safety net that allowed them to fire their biggest customer. So with this incredible government support in their back pocket, what happens next? The company has placed its bet. So let's look at the 3 most likely ways this whole gamble could play out. We can really break it down into a best case, a neutral case, and a worst case scenario. And honestly, it all comes down to one thing. Can they actually execute the next phase of their plan? So the best case scenario, their brand new magnet factory, the 10X facility, gets up and running fast, maybe even ahead of schedule. As global companies get more and more nervous about relying on China, they start looking for alternatives. And boom, MP is right there, ready to meet that demand and become a dominant player. But the worst case, well, that's what investors call execution risk. Let's be real, building a giant, high-tech factory is incredibly hard. If they hit major delays, or if the project costs way more than they planned, they could burn through their cash. That would force them to lean even more on that government safety net, which would definitely test the patience of investors.
All of this brings us right back to the central problem for anyone trying to analyze this company. It's a classic fight between a bold long-term vision and some pretty harsh short-term financial realities. I mean, the argument for being bullish is pretty compelling, right? They're the only fully integrated producer in the US, they have this incredible government policy shield, and analysts are rating the stock a strong buy. But the case for being bearish is just as clear. They are not profitable right now, key financial numbers are negative, and the risk that they mess up the execution of this complex plan is very, very real.
Which leads us with the ultimate question. MP Materials has made a bet, not just on its own ability to deliver, but on the strategic goals of an entire nation. The real question is, in this high-stakes game of critical materials, is a government guarantee the most powerful economic moat of all?